Assalamu alaikum. As we previously used information from financial statements, today we will show what our policies and procedures are governing how financial statements are prepared and what are financial statements. IFRS is the most used standards to prepare financial statements except in the United States of America. Although the IFRS was established as an American organization registered in Delaware and the United States of America, it has its overseas operations registered in London, United Kingdom, and it became accepted worldwide except in the United States of America. So IFRS stands for International Financial Reporting Standards. And the link to the IFRS site is below this video if you're watching from YouTube, and you can find more information about it. In the United States of America, or for any company registered in the United States of America, or even if its operations are outside the United States of America, they have to follow something else that's called GAAP. There are several differences between the two policies and procedures, and for this reason, each country will have to decide what standards should be followed. Some countries will decide to have their own standards. G stand for Generally Accepted Accounting. The second A is for Accounting. Generally Accepted Accounting Principles. So between IFRS and GAAP in US only, worldwide except US. There are negotiations that US accept IFRS as well, so the world will be using the same set of standards. Both are setting policies and procedures on how to prepare financial statements. Now let's see what are financial statements. We have three main statements that are the financial statements. And by the way, they are the same in US or outside US. It doesn't matter if it's GAAP or IFRS. They are accounting terminology that are used. So we have the financial statements. Some are calling it business financials. The first statement is the balance sheet, or they call it statement of financial position. Second is income statement or profit and loss account. And the profit and loss account is calculating the net income or loss for a given period, and it feeds the balance sheet as a change in the owner's equity. And the third statement is cash flow. And it's used to show how the beginning cash balance has used for operation of the organization until we get the end of period cash balance. Basically, it eliminates all non-cash transactions and non-operating transactions like capital expenses or capital revenues from the trial balance. Then you have only the cash transactions during the period. There are some other statements, some would call it financial statements, like statement of change in owner's equity, a statement of shareholders shares, and so on. But these are the main financial statements. In the coming videos, we will have different videos for each of these three financial statements and how they are prepared. And over the time, we'll will explain how they are prepared, and we reach the point where the business is starting working. I prefer to start the thing from the end so that people will see the big picture, then we go through the details. Thank you.